Welcome back to the Dividend Diplomats YouTube channel, guys. You got Bert, the Herd, and Laney, your boys here, the best dividend investing channel on YouTube. Yeah, I'm calling you guys out. Just bring it. But today we're featuring two other real estate investment trusts
Ooh,
or REITs, guys. It's not about the last video with what REITs we featured there. It's not about Realty Income. It's not about AMT, the stocks that Bert's been buying, guys. We're talking about two other REITs in the industry that are down over 10% this year with yields over 5% and even 8%. And we're looking, is it time to consider these REITs while the market is down on them?
smash that subscribe button, everybody. Give the video a thumbs up. Help us get to 19 and then 20,000 subscriber. We
Eventually,
appreciate all your
eventually.
support over the years, everybody. We're always pumped up to keep digging and keep looking for those undervalued dividend stocks because it is our goal to reach financial freedom by buying dividend stocks and ETFs. So we're not leaving a stone unturned until we get there.
Guys, REITs, these real estate investment trusts, they're built on borrowing and acquiring. And when borrowing costs are high, it costs a little bit more. And it squeezes the margin on rents from these REITs, guys. So the fact that there aren't more than likely going to be a rate cut or cuts in the next month or two, and their rates might be higher for longer, it's sent the REIT industry downward. We all know Realty Income's been beat up about what, 10%, Bert, this year,
Yeah. Yeah.
and they are not alone.
No, pretty much every REIT's been beaten down the same because what happened at the end of the year was in November and December, everybody got so hyped up, so excited that the Fed was going to start cutting rates um, earlier than expected, that once the economic news started coming out and people realized that inflation isn't cooling as fast as everybody thinks, or the Fed might not rush to cut rates, they might keep waiting longer, it sent the stocks that are dependent on borrowing and interest rates spiraling down. And that's why so many REITs are down double-digit percent so far in 2024.
Exactly, guys. So we wanted to feature and cover two more REITs here, and even some of the commenters on our last few videos may have wanted to see these or discuss them in the comments on our last real estate investing videos, guys. So we're going to talk and we're going to go through the metrics here, the price to AFO, adjusted funds from operation ratio, not using EPS because they're REITs, guys. We'll look at the payout ratios on them, the dividend growth streaks, the dividend yields, and kind of what the margin looks like with their current year yield over that 5-year yield. The two REITs we're featuring today to discuss and see what you guys think about them, see what we think about them, is Agree Realty Corp, ADC. Yes, you're welcome, guys. And EPR Properties, EPR. Agree Realty is really in a very similar industry with large big box retailers such as Walmart, what Tractor Supply, what are a couple other big
Dollar
names?
General, Best Buy, TJ Maxx, Dollar Tree, Kroger, Lowe's, Hobby Lobby, O'Reilly Auto Parts. Yeah, some pretty big freaking established names and brands are in their portfolio. That's fantastic.
And then EPR is a little bit different, guys. They're in the entertainment industry, guys. They're in the entertainment experience. Yes, the dividend diplomats are the most entertaining dividend investors here on YouTube, guys. The most electrifying dividend investors here on the network, guys. But EPR is focused on like those experiences, though, those resorts. Think about the ski lodges, golf resorts, theaters, fitness centers, gaming centers. That's their niche. That's their specialty is owning the real estate that brings those communities together for the entertainment.
Yeah, and it's great because it's very relevant right now. Was why a lot of people like Vici as well, because consumers continue to spend on experiences where the people were so trapped for so long in the pandemic that they're just ready to get out, spend, and enjoy life outside and relax a little bit. So that's where places like EPR have been able to thrive.
That's right, Bert. So, guys, we're going to look at them. We're filming this as of March 3rd here at night, guys. So prices will be as of technically the end of March 1st. But we're going to go metric by metric, Bert. I'll take ADC. You want to take EPR?
That sounds great.
That sounds like a plan to me. All right, guys. Agree Realty Corp trades at $56.56. AFFO on their latest release was $3.95. So they're actually at a 14.3 price to AFFO ratio. It's pretty solid right now. I think a little bit higher than O or Realty Income.
Yeah, I think Realty Income was a little under 13 when we talked about them on Monday. So this is, yeah, it's a nice little premium to O. EPR's price is 41.76. AFFO is 5.22. That's a price to AFFO ratio of not one, not two, not three, but eight. Eight. Eight, a single digit one, just on the money, single digits.
Yeah, I don't think we've seen a single digit REIT.
No, no, we haven't. I always love when it ends up on a round number too, because the odds of that just are never that great. So
Right.
it's fun. So let's look at the payout ratios here. What is ADC? What is Agree's payout ratio?
So ADC, guys, is another monthly dividend REIT. Make some noise for another monthly dividend REIT, guys. Coming to your pay, coming to your mailbox, coming to your dividend account, guys. They pay $2.96, per year right now, or 24.7 cents a month. That's a payout ratio of 75%. So not too
Yeah,
bad.
that's great. Again, right in line with Realty Income. That's right on the money. EPR's annual dividends 342. That's a payout ratio of 65.52%. So very low for the REIT sector. It's a very low
Very
ratio.
strangely low.
Yeah. Let's wait till let's put a pin in that and see what the dividend growth is looking like the next one. But first, let's talk about Agree's dividend
Yeah,
growth.
the dividendinvestor.com brings 6.77%. And, I went back in to see how many years as well they've been growing it. And I could argue because they actually went from quarterly to monthly about 3 years ago in 2021. So even looking at the quarterlies, it looks like they're about 10 years of growing dividends right now.
Yeah, that's very solid. Very solid. EPR's 3. They've increased it for 3. And their 5-year dividend growth rates, well, not that great. It's only 1%. So,
Wow.
wah, wah. The good news is that payout ratio so low, they have room to increase it if they want to.
And they can continue to pay a certain dividend as well. So get into the dividend yield, guys. ADC is at 5.24%, which is a full percent higher, 1.06% higher than their 5-year dividend yield average.
EPR's yield 8.19%. Again, a full 1% over the margin. You know what's funny about this, Lanny?
What's that?
Their yield is higher than their PE ratio or P price to FFO ratio. How many times have we ever seen that on this channel?
I don't know.
Yeah, that's
And what
interesting.
else? What else did we just find out about EPR as well? I made a mention about ADC on this.
Well, let's look at the history. Let's look back at the history. They're a monthly dividend paying stock as well. A second monthly dividend paying REIT that we just discovered while we were recording this video. EPR, everybody. They pay an 8% banger every single month.
That is a banger. Hey, do you guys own ADC or EPR? Let us know in the comments right now, guys. ADC is down 11% this year, down 20% since last year. How does EPR look right now?
Down 14%, but they are up 2% over the last 52 weeks. So they're hanging in there. They're hanging in there for a longer period.
Both stocks, I'm just going to take this. Both stocks are trading 1% premium right now over their 5-year dividend yield averages. So you're definitely getting more yield now than you were anytime over the average of the last 5 years on both stocks. All
Yeah.
right, we're going to throw the metrics back up here on the screen for you guys to look at them. But for what's your hot take? The Dividend Diplomats birth the Hurt hot take on this one.
Well, everyone seems to want to look for alternatives to Realty Income right now. So when you're looking at ADC from that lens, Agree looks great right now. I mean, their metrics are looking pretty solid. They're very much in line with what you get from a company like Realty Income. The kicker is higher dividend growth. That's the big difference, at least what I'm seeing, especially since I've been watching Realty Income so closely. Their 5-year dividend growth rate's double Realty Income. So that's great. It's a great alternative to Realty Income from that perspective. And EPR, I didn't personally know much about it going. It just was fun to learn. What are you thinking, Lanny?
Obviously I own a lot of B&L Broadstone Net Lease and bought a couple shares. If you guys recall the last, I think that was on our one of our videos a week or two ago. Poof. Yeah, I do like the balance of ADC. I think that's probably the more conservative investment here. Seems like EPR still needs a little bit more time to figure itself out. I know entertainment's usually the area that consumers would pull back on
Mhm.
if there was a tightening in the economy,
Yeah,
aka a recession. So that's the one concern I would have there. I'm
yeah,
not buying these two stocks right now,
no.
but could argue that they are both undervalued. But currently, I'm watching.
Yeah, the one thing about EPRs, I just went to your website as you were talking through about the pullback potential. When I went to their portfolio composition, 37% are in theaters and 24% are in eat and play type transactions. So you do run some exposure to people tightening their budgets and not going to movie theaters or not going to play Top Golf. That's usually, you're right, Lanny, probably one of the first things that are going to get cut out.
What do you guys think? I've already asked if you guys own the stock, but do you guys think these are stocks to buy right now? Are these big passive income producers because they pay that monthly dividend check, guys? I know there's something to be said about collecting something every month, which is why everybody loves Realty Income because they coin themselves the monthly dividend income payer. And here are two other stocks that pretty much say, that's cool, bro. We do the same thing. So
If
let us know what you guys think on these REITs.
you haven't already, subscribe to the channel. Give this video a thumbs up. And Lanny, what do we need to tell all the diplomaniacs out there?
The best there is, the best there was, the best there ever will be. No, no, I'm just kidding, guys. You're either with us or you're against us, Jack. That was Bert and Lanny from the Dividend Diplomats. Over and out.